Hello, today is February 18th, 2026. Let's do the daily analysis of gold. Gold is showing a very nice and impressive move on the trading chart today. We can see consecutive bullish candles starting all the way from the early Asian market open, 1, 2, 3, 4, and 5 candles in a row, which are almost exactly the same size and shape. And what exactly does this pattern want to show us about the market direction today? Well, unfortunately, our technical analysis from yesterday turned out to be quite wrong. That is to say, yesterday we fully expected the market to move in an upward direction within these specific areas, but it did not. The market did give us a high, and we could have taken our profit from the market. Now, I'll show you on my own MetaTrader, but we didn't take it. And the interesting point here is that it gave us another low. It became an experience for me. What kind of experience? That is, let's say we draw a Fibonacci from here. From here, from the bottom of the move to the top of the move. We were supported once at the 50% Fibonacci level upwards, between the 23% and 0% Fibonacci levels. After that, when in the first leg we managed to retrace up to 50%, we shouldn't have expected that just by seeing this low again, we could open our long position on the market. We should expect a second leg of movement. That is, it's better to say wave 1, wave 2, wave 3, and wave 4. Let's consider this move up to its third wave, where the wave ends here. As a result, what we could see in the market was that the market gave us a first leg. We should have waited for a second leg and then taken our long position. We were entering the market too early. And since it had already gone below the 50% level, we could have drawn our Fibonacci level up to here, exactly up to here, and said, well, gold has already touched below the 50% once, and we expect it to reach the 61% level. So after seeing these highs, the Fibonacci should be able to provide support. Now, did our trade here yesterday hit the stop loss? Was it risk-free? Yes, I'll show you on the chart. And we were expecting a long position from here. So this is one point. Therefore, our first reason for taking a long from the 61.8% level is this. Now, I want to show you my trade on MetaTrader, where I entered with the maximum amount of leverage. That is, I entered this trade today with the maximum risk I could take. I want to show you the reason for that. What was it? The first signal, the second form. We draw our Fibonacci from the previous low to this high. What happened? It dipped below the 23% level, then came back above 23%, made a high, and gave us the second leg at the 38% Fibonacci level, right at the 38% Fibonacci line. This situation actually provides us with an exceptionally excellent and strategic buying opportunity right now. This represents the second major reason why we decided to enter a long buy position on gold at this specific level. Now for my third reason, I'm going to switch over to a different time frame to analyze the chart, to the daily. On the daily time frame, we can see how beautifully gold has moved here. Actually, it's better not to show this on this chart. I'll show it to you on my MetaTrader chart. As you can see, it is significantly more organized, much neater, and a lot cleaner over here. Now, let me go ahead and share my MetaTrader platform screen with you so we can look at it together. Yes, if you look closely at what we have right here, and you might ask on which specific time frame, well, looking at the daily time frame, what we can observe is that we had a very strong daily candlestick right here. This candle almost completely engulfed the entirety of the previous candle's body, which effectively turned the overall market sentiment bullish. Now we can see that on the daily chart, the price has come exactly to the middle of this pair of candles and closed here. So this could be a setup for us to take a buy position, for example, on the 5-minute chart. Let me show you what happened yesterday, and when I say trading and analysis, I mean trading and analysis. Let me explain this to you exactly so you understand what the story is and what the difference is. Look, in our analysis, we said here that we became bullish by mistake. And of course, it's natural for any trader to make mistakes. Now, I had 2 long positions here, which I showed you yesterday as well. The profit from this trade went up to about $2,000, and I didn't close the trade. I took that risk. Well, actually, you can't really call it a risk. It was a decision I made to forego that $2,000 in profit so that if the market moved toward $5,400, I could make a really good profit, around $20,000 to $30,000 from the market. Why? Because here with this first position, I hadn't taken on any risk and my trade was risk-free. And as you can see here in my trade history, if I zoom in, what happened? Here we can see that our trade was exactly at the entry point, meaning our long position was right here. Yesterday's trade was closed right at the entry point at 4,900. So what happened next? After that, I didn't take any more trades. When were the trades closed? I waited again for a good buying opportunity. I was waiting to see if these zones could act as support. According to yesterday's video, I was hoping to buy again in those zones, but the market didn't wait for me at all. With one 5-minute candle, it dropped, and then with two 5-minute candles, it fell all the way down. When I saw this pin bar candle here, I made my purchase and immediately set my entry point. At the buy point, this one also became risk-free and was closed. Up to this point, I haven't taken any losses and I've had 2 trading opportunities. When this stop was hit, I waited until the market reached the area where those events happened. First, it landed on the 38% Fibonacci level of our main wave, and second, it landed on the 61% level of our smaller wave. This was my second confirmation. My 3 daily candles closed right here, and I marked this zone. Exactly, I was looking closely at the daily candle. I eventually decided to close the trade right at the specific point where I had originally entered the position here, and fortunately, the market moved in my favor and gave me some decent profit. I ended up closing the position here with a gain of about $600, and then I think later on Friday, I managed to secure a much larger profit of around $2,000 in total. I closed with a profit. Why about today's trade? I was expecting another pullback, and the market was closing and moving towards the Sydney session. As a result, I decided, since I never trade during the Sydney session, to wait for the start of the Tokyo market, the Asian session, and so on. So here, I closed my trade with a profit. Again, I waited, and with the start of the Asian session, I entered a trade here, and even before that, before the Sydney market, because I suspected that there was a strong possibility the market would make a sharp move upward from here. I had 2 trades open here, and I closed one of them here with a $100 profit. I pretty much closed it since it was just a scalp trade, and I kept this trade open, which wasn't a large position. It was about half a lot, roughly 6/10 of a lot. I kept it open so that if the market suddenly pumped with the start of the Sydney session, I wouldn't miss out and lose the other half. In fact, I waited with the volume I was allowed to trade that day until the market reached this lower zone. Right here at around 4 in the morning Dubai time, with the start of the Tokyo session, I entered the trade. The trades I have right now are about $6,300 in profit. But considering that first, on the 1-hour time frame, here I had a resistance level that I broke, and now I have it. I'm pulling back to this resistance and waiting to see what happens at 10:30 Dubai time. So I won't close this trade, even if it means both of my trades hit their stop loss. I can enter again either in these zones or even lower zones, possibly with a larger position size. Where I'm confident and have a reason, I can enter the market. Look, I entered the market with a reason in 3 places. Actually, it's better to say 2 places. And in both cases, the market gave me some profit afterward. It has given me profit, but my trades are no longer scalping. Now I'm swing trading, and the loss I've set for these trades is about $4,500. Why? Because the profit this trade is expected to give me is much higher than that. The profit I'm expecting from both trades is roughly $60,000. As a result, I wait even if I hit my stop loss, because now I've entered the swing trading phase and the market. It's a place where, just as I told you yesterday, it can offer me a good trading opportunity. It's positioned very well on support and Fibonacci levels, so we can take our profit from it. As I mentioned yesterday, our trades closed without a loss, and today as well, they will close without a loss. If I find a good entry point at lower levels, I'll enter the market and will definitely update you again. But we still see Tether heading towards $5,400, and this is a number I've been talking about for about 2 weeks now. The market has tried several times to move in that direction, and each time it hasn't really been rejected. It has undergone a correction, and we're waiting to see what happens to the market today. Looking at the various news reports that we have gathered regarding the current state of the market today, I should probably point out that, well, we do not really have any major or particularly significant news to share with you at this time. At 5:30 in the evening, there's news from the US, but it's said that it won't have much of an impact on the market. Its effect isn't very significant. We have the FOMC meeting, the meeting minutes, at 11 p.m. Dubai time, which is actually an important piece of news. I'm even considering two scenarios here. One, for example, is that by 11 p.m., gold has reached around this area, and with the FOMC minutes, we might be able to move upward. Or it could be that it has already touched these areas and we might be able to move downward from there. Then we wait and see what happens. But based on what we see in the daily candlestick chart, I see today as a completely bullish day for gold. There is a distinct possibility that the price of gold, which is currently sitting at 10.16 or perhaps closer to 10.30 Dubai time, might actually give us a bit of a surprise move. And we should watch it closely, another bullish move. That's one point. The second point is what you see in this part of my chart. Let me share my chart with you again. In this part of my chart, you can also see an expert advisor that we developed ourselves for capital management. This is how it works. I specify my entry point. I also specify my exit point on the chart, and in the expert advisor settings, I can set it up. I determine how much risk I want to take on my balance, and here I set my stop loss. It places a pending position for me, with both take profit and stop loss. Based on the percentage of balance I specified, it automatically calculates the lot sizes. This has really helped me for risk management. If you think this could be useful for you, definitely let us know so that on the finpip.com website we can make this expert advisor available for free, so you can access it and use it. Wishing you happiness and success in managing your trades. Thank you for watching this video with me. Don't forget to subscribe, like, and comment. Thank you.